Fantastic. Let's talk ETFs, right? So when
Yeah.
people think about NASDAQ, they think about the tech space, they think about the QQQ ETF, one of the biggest names in the space, crazy amount of assets under management, sort of a low expense ratio. I think it's 20 basis points if I'm familiar enough with it. Um, you found another ETF that you told me the other day that you sold all of your QQQ and you put it into this new ETF. What is this ETF and why did you make that choice?
Yeah, so the ETF is QQQM, so it's the Invesco Nasdaq 100 ETF. It's basically the same as the QQQ Invesco Trust. The difference is the expense ratio is lower, so it's only 0.15%, so it's 5 basis points lower than QQQ. It's exactly the same. It's a Nasdaq 100 ETF. It means that it's investing in the top 100 companies by market cap of the Nasdaq. And I mean, of course, I think maybe people listening might be wondering why would Invesco launch two ETFs that are so similar, right? And I mean, obviously, I don't know the answer because I don't work there, but I can imagine that the reason is QQQM is really targeted towards investors that are more looking at the longer term investing. So they really buy it to hold it for a longer period of time. While QQQ is still an ETF that is targeted to maybe daily traders, so people that anyway are trading a bit more often. For starters, there is options available on QQQ that QQQM doesn't have. And also it's a bit more liquid. So QQQ is still a great option, right? And you mentioned, I think it's the fifth largest ETF in the world at the moment, very successful for Invesco. And I think it's still a very good option for investors that are maybe a bit more on the active side and or day traders. QQQM for me is a no-brainer for anyone that has a bit more of a longer time horizon in terms of investment, because again, you're just saving 5 basis points in expense ratio, and that really accumulates over time, especially if you're talking about 10, 15, 20 years of time. So and I think one of the reasons why Invesco launched it is also because they want to be competitive, right? At the end of the day, ETFs have seen a massive inflow of money in the last 10, 15, 5 years. Passive investing is on the rise, so obviously Invesco wants to make sure that there is no one else launching a more successful Nasdaq 100 ETF than them, and that's why they launched it. I don't think they are alone in doing that. I think recently I've seen also Grayscale doing something similar for the Bitcoin fund. So I mean, at the end of the day, they don't want to lose, of course, um, their main ETFs that generates a lot of money for them and does a lot of AUM, asset under management. But they still want to be competitive, so that's why they end up launching a parallel ETF. But from an investor perspective, I mean, it's a no-brainer really. If you are holding it for at least 5 years, I would say why paying 5 basis points more, right? QQQM is the place to be in that sense.
Yeah, very solid point. Sounds like the Bogle effect still kind of creeping into the ETF market, driving those expense ratios down as much as possible. And I think they realize that. That's a very
Yeah.
interesting point. I was looking here on Seeking Alpha, just at the two symbol pages for QQQ and QQQM, noticing that the factor grades are a little bit different. The quant does have a buy on both of them, but the risk grade is a little bit more favorable for the QQQM. I'm guessing because of what you're kind of talking about. I mean, assets under management of about 41 billion almost, versus QQQ, which has the 320 billion, but more of that trader's dynamic, right? Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.